Nuburu Inc. stock, trading under ticker BURU on the OTC Pink market, is currently sitting at $0.049 per share, down 31.37% in live intraday trading today. That steep downward movement comes directly on the heels of the company transitioning off the NYSE American exchange after trading below 10 cents triggered formal delisting proceedings. At first glance, if you glance at your individual brokerage account or check popular investing sites like the Robinhood app, SoFi Invest, or Interactive Brokers platform, the chart looks like a complete train wreck. Retail investors who follow penny stock trading on Robinhood Stock Trading or SoFi Active Investing are looking at a company whose equity value has dropped precipitously over the past year. But if you stop looking strictly at the daily ticker price and examine the operational balance sheet, a completely different picture comes into focus. Most market participants assume Nuburu is on the edge of complete insolvency, crushed under debt and market suspension. The reality, however, is that management just closed a $38 million public offering, completely eliminated $16.75 million of heavy debt, and is executing a sharp pivot toward high-demand defense and counter-drone systems. To understand why the share price is under severe pressure today, while the underlying balance sheet is structurally stronger than it has been in years, you have to look closely at the mechanics of microcap offerings. In mid-July 2026, Nuburu closed a $38 million public offering priced at $0.1555 per unit. That transaction issued over 244 million shares of common stock, alongside pre-funded warrants and Series B preferred shares onto the open market. When a company with a market cap previously floating under $20 million introduces that volume of new equity, immediate dilution hits the existing shareholder base hard. Investors holding Nuburu stock across various online investing and online investment platforms saw their equity ownership percentage diluted overnight. Furthermore, because the stock fell below the 10-cent mark, the NYSE American moved to suspend trading, shifting secondary trading activity directly to the OTC Pink market. If you trade through a Fidelity brokerage, manage funds through Fidelity Wealth Management, or use an Interactive Brokers account, seeing a ticker move to OTC Pink often creates immediate selling pressure. Yet intraday trading volume today has surged past 6 million shares as traders on Fidelity ETFs, Fidelity mutual funds, and Interactive Brokers stock trading weigh this massive capital injection against short-term dilution. What many retail participants looking for investment help on SoFi stocks, Fidelity IRAs, or Robinhood investments miss is where that $38 million went within days of closing the deal. Nuburu immediately extinguished $15.5 million of remaining principal on its December 2025 debenture, along with $1.25 million in subordinated convertible notes from its previous Lyocon acquisition. By retiring nearly $17 million in total debt, Nuburu permanently removed its recurring monthly amortization burden. In plain terms, they no longer have to drain operational capital every month to satisfy debenture holders, nor are they forced to funnel equity proceeds into debt service. For individuals engaging in self-investing or managing an intelligent portfolio through Schwab Intelligent Portfolios, debt elimination represents a fundamental shift in corporate survival odds. Instead of sending cash to lenders, the remaining net proceeds are allocated directly toward fulfilling the strict financial assurance requirements for a proposed 70% controlling interest in Tecne SPA, an Italian defense and security platform company. This brings us directly to the central tension shaping Nuburu stock right now: expectation versus reality. The market expectation, reflected in today's 31% drop to $0.049, is that Nuburu is a struggling industrial laser maker, pushed off a major exchange and burdened by heavy dilution. The reality is that Nuburu is rebuilding itself into an integrated defense hardware supplier, targeting a multi-billion-dollar counter-unmanned aerial system market. Recently, the company reported field test results for its laser dazzler technology developed alongside Tecne in Italy. In controlled testing, these high-power optical systems achieved complete suppression of drone electro-optical sensors at distances up to 100 meters. As defense departments worldwide actively seek cost-effective directed energy weapons to neutralize unmanned aerial threats, optical counter-drone technology is securing serious institutional focus. While retail investors browsing Robinhood Crypto, Robinhood Cash Management, or SoFi Robo-Advisor accounts view laser welding as a niche industrial tool, military applications open up substantially larger defense procurement budgets. Let's pause right here for a quick moment to get your take on this ticker. Comment below how many shares of Nuburu stock you currently hold in your portfolio, or share your thoughts on whether buying OTC Pink recovery stocks is a strategy you use. I read through your comments to see how everyone in our community approaches high volatility microcaps. Now let's step back and examine what Nuburu actually does from a fundamental perspective and how it reached this critical junction. Headquartered in Denver, Colorado, Nuburu established itself as an early innovator in high-power blue laser technology. Traditional industrial lasers rely heavily on infrared wavelengths, which reflect off non-ferrous metals like copper, gold, and aluminum. Nuburu's proprietary blue laser light absorbs up to 20 times more effectively than infrared, enabling manufacturers to weld copper and other reflective metals faster, cleaner, and with minimal heat damage. This capability was initially positioned as an essential tool for electric vehicle battery production, consumer electronics manufacturing, and aerospace fabrication. If you follow major technology holdings like Tesla stock, Apple stock, or Nvidia stock through your individual brokerage or Fidelity trading platform, you know that advanced manufacturing efficiency is a key priority across global supply chains. However, despite clear physical advantages in metal absorption, commercial adoption in industrial markets proved slow and exceptionally capital-intensive. Between 2023 and early 2026, Nuburu contended with heavy operational cash burn and persistent revenue challenges. Quarterly operating expenses regularly ranged between $4 and $8 million against revenue figures that struggled to reach meaningful scale. To maintain operations, management relied heavily on debentures, convertible notes, and equity distribution agreements. This created a dilutive cycle where debt service drained cash reserves, necessitating additional share issuances that dragged down the stock price and triggered compliance warnings. When investors analyze historical performance on popular investing sites, they see a stock that dropped from over $4 down to single-digit cents. That historical track record explains why so many investors browsing through SoFi Investing, SoFi ETFs, or Robinhood fractional shares remain skeptical about the company's long-term viability. However, evaluating a stock solely on historical financial reports while ignoring a major strategic pivot can result in missing key market shifts. By moving to acquire a 70% controlling interest in Tecne SPA, subject to Italian Golden Power regulatory review, Nuburu is shifting its focus toward high-margin defense contracts. Tecne specializes in military tactical vehicles, electronic warfare, and secure communication systems. Integrating Nuburu's high-power blue laser optical technology with Tecne's defense hardware transforms Nuburu from an industrial component supplier into a specialized military platform provider. The Italian Golden Power authorization process ensures that national security interests are protected, and Nuburu's recent debt payoff was specifically executed to meet the financial guarantees required by the Italian regulators. If approved, this transaction provides Nuburu with direct access to European defense procurement channels and established military supply agreements. Looking ahead to future catalysts, risks, and realistic market scenarios, the trajectory for BURU stock involves clear trade-offs. First, trading on the OTC Pink market creates operational friction. Stocks on OTC Pink often experience lower trading liquidity, wider bid-ask spreads, and reduced accessibility for users on certain automated platforms or conservative wealth management accounts. Management has indicated plans to execute a stockholder-approved reverse stock split and pursue an appeal to regain compliance and eventually relist on a national exchange. Second, execution risk regarding the Techne transaction remains a key factor. If regulatory clearance experiences unexpected delays, cash burn could once again pressure operations. Conversely, if Golden Power approval is finalized and the Techne integration proceeds smoothly, Nuburu gains immediate defense scale, meaningful revenue streams, and a viable path toward institutional re-rating. For investors navigating self-investing options, seeking investment help, or deciding how to invest online through various individual brokerage tools, Nuburu represents a clear example of high-risk, event-driven speculation. The market is currently focused on the immediate pain of exchange delisting and heavy dilution. Yet beneath that negative sentiment, the company has retired its debt, raised substantial capital, and realigned its technology toward one of the fastest-growing segments in defense technology. As retail traders on Robinhood stock trading, SoFi active investing, interactive brokers fees comparisons, and Fidelity mobile app platforms